Hey everybody, my name is Amin Reina and I'm an investment coach here at Sage Investors, and I'm here to do a quick mind map of my decision to buy shares in MGM Entertainment, ticker symbol MGM. This is a stock that a company that I really didn't have on my radar screen at all, but then all of a sudden a few things have occurred in the environment out there that all of a sudden got onto my radar screen and made me wanted to take a look at some casino gambling kind of stocks. Just recently, the Supreme Court in the United States overturned a ruling that essentially sets the table to allow individual states to essentially legalize sports betting. Up until now, the only places where you could bet on sports in the U.S. has been in Las Vegas, and I believe in Atlantic City. It's mostly in Vegas and Nevada. But this recent Supreme Court decision just threw that out the window, and now it's eventually going to be open season on sports betting, which is a huge, apparently a huge segment. A huge market, in the sense that there's some estimates out there that have said that almost $150 billion a year is engaged into put into sports betting, is betting on sports. So it got me to thinking, you know what? Maybe I want to take a look at some of these gaming stocks, because they potentially are set up to they have the infrastructure to be able to deal with this. And so I started looking around, and one of the companies I started to look at was MGM. And so when I started looking at MGM, and like I look at any other stock, one of the things I do is, making investment decisions and trying to figure out if I want to buy or sell a stock comes down to asking questions and answering questions about a company. And once you can answer some basic fundamental questions about a company and the stock, you should have a pretty good idea whether you want to buy or sell it, or not even buy it, or avoid it. So what I'm going to do here is, I kind of, for every company I analyze, these are the types of questions that I ask. These are typically the questions I ask to help me frame my investment decision. So the first question I always ask about a company and a stock is, what do they sell? What is their value proposition? What makes them so special compared to other types of businesses out there? Well, MGM is essentially, it's a gaming company. It's they sell entertainment. They sell entertainment and leisure, and they do that through various forms, through obviously their gaming, through casinos, blackjack, poker, and all that side. They have resorts that do that. They own some of the more famous casinos out there, like Bellagio, Mandalay Bay, most of these in Vegas. Then they have some properties also in China, in Macau, that are quite prominent. So they sell that whole. They're the classic sin stock. That they're about gambling, they're about betting, and they're about entertainment and leisure. That's their value. That's their edge. That's what they're all about. Who do they compete with? Well, similar. They compete with other resort gaming type companies. So that would be companies like. You just have to basically walk down the strip in Vegas, and there's your competition. So Wynn, Las Vegas Sands, Caesars are your big players. And so that's, from a traditional perspective, those would be that would be MGM's main competitors. But also now, as we're saying, the game changer moment with sports betting is now online sides of it, online casinos. And it's not just online casinos in the U.S., we're talking global reach. So there's companies like Paddy's, like a lot of English UK gambling houses out there that could be potential competitors for MGM. Heck, I wouldn't even throw Amazon. Like, what's to stop Amazon from just wanting to just get into online betting? They have an infrastructure that I wouldn't be surprised that they could get into that. The sports teams themselves. This may set a real game changer moment in that you might see go to a stadium and you might be able to bet on the games while you're at the stadium. So I wouldn't be surprised to see some football teams or baseball teams have like a betting area where you can bet on like proposition bets on like, who's going to hit a home run or how many home runs are going to be hit. Not necessarily betting on the outcome of games, but this whole dynamic of just allowing sports betting is just going to open up all kinds of gambling opportunities. So I wouldn't be surprised if the teams would want to get a cut of this action. It's their product, so don't be surprised about that. Who are their customers? Again, we're talking about the young people with a lot of disposable income, but then you got old people, retirees. You've been down to a casino, you see the ones that are sitting there are worth at those slot machines, just like endlessly dropping money in there and moving that one-armed bandit. I think that's what they call it. Out there. So there's definitely a cross-section of people that go to casinos or go to these type of resorts. The question I always also ask is, that's great, people go there and put money in, but will they come back? Is this just a one-time deal? And given that the addictive nature of gambling and entertainment and the lure of sizzle, which is a major value proposition, chances are yes, people will come back, and especially if they have the money, if they have the disposable income to spend it, they'll definitely come back. So definitely a recurring form of revenue opportunity that these type of resorts offer. Now, that's all well and good, but at the end of the day, we're investors, and we want to invest in companies that are profitable, that can actually have demonstrated an ability to create tangible wealth for its shareholders. And so that leads to the probably one of the more important questions we get to as investors is that we ask when we're analyzing companies is, do they make money? And so when I look at companies' profitability, financial performance, one of the key metrics that I kind of go for is economic profit, which is basically taking a company's return on invested capital and subtracting the cost of capital. If the value is positive, then the company is demonstrating it's creating tangible wealth. And ultimately, stock market and investors will reward companies that can demonstrate that they're creating tangible wealth. So when I looked at MGM's performance, when I looked at their return on invested capital, it came in over the last 3 years. It's ranged from almost 1.2 to 11% return. And when you compare it to the company's cost of capital, which is about 9.4, it hasn't been consistent in creating wealth, but it has demonstrated it's creating wealth. And if you look at the last year's numbers, it was actually its economic profit was negative. So from an investor perspective, that's not a good thing I want to see. And it's not something that I want to see. I kind of drilled down into some of the numbers. And when you look at where the revenues are coming from MGM, you think about it, it would be coming from Vegas or Nevada and their resorts out there. But really, it's China that's a big driver. And when you look at the China numbers, their revenue base is actually growing. It's almost double. It's almost 2 times the revenue is coming from China. So, and it's been kicking up higher of late because of the growth now. The China market, the Macau market, has been pretty kind of dead the last few years because the government's cracking down on a lot of corruption and all that kind of stuff. And so the China market's been kind of a lagging part of the portfolio, but now that seems to have been changing. It looks like the government's loosening up a little bit of the controls over there, and it's flowing into the numbers in terms of traffic. So I don't like the number in terms of the return on invested capital, but when I'm looking at potentially the loosening of the factors in China, and then when I start to look at this whole concept of potential revenue streams that could be coming in from sports betting, I'm willing to kind of give this a little bit of a benefit of the doubt and kind of like to see how this plays out. If I go strictly quantitative, I really don't like these numbers, and I probably would stop my analysis here. But I'm just really intrigued by this what I think could be potentially a game changer moment with the whole sports betting side of it. So that's, it is what it is. So the next thing I look at after that is the financial position of the company. Is this a company that's in strong financial position? Is it going to go out of business tomorrow because they're going to run out of money? Couple of areas I look at. First of all is liquidity. Their company's ability to meet their short-term obligations or day-to-day obligations. And that's usually you can sum that through the current ratio, and which compares the company's current assets to current liabilities. And right now it is under 1, which is again not a great thing to see. You want to have companies that have sufficient current assets to cover their current liabilities. I looked at debt levels. The company has a pretty high debt ratio, and it's been a bit of concern for management. But what we've been seeing, though, is management seems to be taking a lot of tangible steps to lower their debt position and bring that down to a little bit more manageable level. Quality of assets is another thing I look at. I look at the ratio of goodwill as a percentage of total assets, and it's got a pretty low percentage of goodwill. So overall, if I'm looking at the balance sheet, it's not the greatest. It's kind of meh on that. So right there, when you're combining companies' financial performance with the state of their balance sheet, although it seems to be getting improving, there's nothing here that really jumps out to me that's really solid from that perspective. Then the last thing I look at is risk. What are the risks out there facing the company? What could take the company down a few notches and threaten the business line and threaten potential future profits and future revenues and cash flows? So with the whole gaming industry, potential risk is this online betting stuff, or this sports betting thing really takes off, and potentially, you could see maybe increased players entering the market. Like I talked about, potentially, like an Amazon even getting into this. You're going to have foreign gaming houses entering the play. You just could see you could see some saturation in the space. Nature of it, one of the things that drives casinos is people coming in and spending money. So, the nature cycle of the economy, if the economy is doing well, then people have more money, to spend, free money or discretionary income to spend. That plays into it. So it's very sensitive to the economic ebbs and flows that are out there. Then, the fact of the matter is, I talked about earlier, is China is a big driver of its revenues now. And, with China, there are risks. The licensing issues, the government could just literally overnight pull their license in Macau and say, hey, you can't operate here anymore. That side of it is out there. That is a risk. And then I guess another challenge really about the company is just remaining fresh, offering a fresh experience. And so it's constantly having to reinvent itself, and it's kind of its challenge is staying hip, staying relevant, offering that unique entertainment piece that will draw people in. So having the right performers, acts, drawing in sporting events, offering really cool, interesting gaming type options, just the whole entertainment, the clubbing, nightlife kind of thing. It's a constant reinvention by companies like MGM that they have to face. So these are elements that I think could come into play, and I think these are ongoing elements that these type of companies face. Finally, at the end of the day, if I think the company is worth buying, it's a good company, a good, well-managed company, you have to start looking at, okay, well, what's the stock like? Is the stock cheap or is it expensive? Maybe, it could be a really great company, but if the stock's really expensive, then maybe I'm not going to buy it. So in terms of valuation, right now the stock has been it's pretty out of favor. The stock's been trading in the low 30s, 32 level. It's out of favor relative to other gaming stocks out there. If you're looking, and it's probably, in a sense, it is probably the cheapest out there, and it's driven by some of these factors like mediocre performance, kind of not the greatest balance sheet out there, that are probably piling on to the in terms of the valuation. Just give you some quick numbers. Its forward PE right now is at about 25, which is expensive, but it's actually cheapest compared cheap, relative to other casino companies out there. I looked at it on a discounted cash flow perspective. Valuations come in between $30 to $36, and as I said, it's trading right now at 30. When I started to look at it, it was trading at 32. So right now it's a cheap stock, but the company is not really running at all cylinders. So based on that, I normally would have kind of passed on this on MGM, but I'm really intrigued by this whole sports betting concept, and wondering if this is going to give these type of companies a real new ramp for growth. And one of the things MGM is it seems like it's, from what I've known, what I've learned about it, is they kind of have a little bit of a head start on the whole sports betting side. They've actually developed an app. They can literally implement a sports betting service across their platform tomorrow if they can. And I think that's to me, I think what's drawn me to the company as sort of a good value play in terms of a lot of upside is that potential with the sports betting side of it. They seem to have a bit of a competitive advantage on it, and could be the first company out there in terms of offering a comprehensive betting platform, both in the casinos and also just online out there. They kind of put their allocation, they put their investments into building out this kind of platform with the anticipation that the Supreme Court was going to strike down the whole sports betting illegalities of everything. So at the end of the day, when I factored, this is kind of what drew me into it. It is a well-established sports betting company. The performance isn't great, but it seems to be improving. The balance sheet is not great, but it seems to be getting better because they're trying to make a conscious effort of paying out their debt. And it's got some tools out there, some products out there that are allowing it to get a head start on the sports betting side of it. And so I looked at it, and the fact that the stock is cheap, it's out of favor. I thought, you know what, maybe there is a potential for it to hit into the 40s. Maybe there might be maybe a 20-30% gain that could be had from here, and taking sort of the other side of the bet, excuse the pun. So when I factor all these elements together, they led me to say, you know what, I like to kind of have an exposure to this side of it, and I think this might be a cheap way of getting into it. So ultimately, I bought it. I decided to make it a speculative buy. So I put a little bit of money into it. We'll see how it goes, and have my exit strategy. If it goes down, if the stock goes down into the 20s, then I'm out of it, and that's the end of that. So that's my decision there. My mind map of my decision-making thought process that led me to buy shares in MGM Entertainment. If you want some more information about this and other mind map videos, you can check out my website, sageinvestors.ca. I also have information there about the online courses and in-person courses that I teach on buying and selling stocks and ETFs, and you can check it out all there on my website, sageinvestors.ca. So thank you very much for listening. My name is Amin Reina of Sage Investors, and we'll catch you again another time. Cheers.